we will go ahead and get started now. Hello, everyone. Welcome to the webinar hosted by Accern and RCloud on how AI can help with ESG investing. My name is Grace, and I lead the content strategy at Accern, and I will be moderating today's webinar. So with that, I will go ahead and introduce our presenters. We have Gaurav Bansal, who is the founding partner of RCloud. RCloud is a London-based fintech that builds AI solutions for financial services. Its mission is to democratize AI and make it easy for companies to use alternative data and intelligent automation. Prior to RCloud, Gaurav was working as a senior transformation leader, delivering large-scale change programs for top financial institutions such as Goldman Sachs, Credit Suisse, Fidelity, RBS, and Deutsche Bank. Our other presenter is Riaz Nakuda, who is the Vice President of Strategic Partnerships at Accern. Accern offers a no-code AI platform which enables data teams within financial services to build AI solutions to obtain insights from structured and unstructured data. Financial teams can then use these insights to make smarter investment and risk decisions. Prior to Accern, Riaz worked with IBM Watson as an offering manager and ran the quantitative sales team for S&P and Algorithmics, focused on investment and risk management for buy-side and sell-side financial institutions. So we will be hosting a Q&A session immediately after the presentation. However, if you have any questions throughout the presentation, feel free to drop them in the Q&A chat box. And with that, I will hand it over to Gaurav from RCloud.
Thank you for the introduction, Grace, and welcome everyone who has joined us today for what I hope would be an interesting and informative webinar on AI and ESG. In terms of agenda, we'll start by reviewing the current ESG landscape. More specifically, I want to talk about some of the macro and micro drivers for ESG investing. We'll look at some of the metrics and methods that are currently used by investors for ESG analysis, and also the limitations that come with the data sets that are available today. I will then hand over to Riaz, who will share his insights on how artificial intelligence can be a game changer for ESG investing, and will also show a demo on how we can track ESG sentiments for various entities. So let me kick off with the next slide, which is a poster of the 17 Sustainable Development Goals. So some of you might be aware, in 2015, these goals were adopted by all United Nations member states as a universal call to action to end poverty, hunger, reduce carbon emissions, protect our planet, stop any kind of discrimination, and ensure equal opportunities for all. I'm fascinated by these. I think it's such an amazing initiative, and credit to UN member states for setting this as a target, pretty much for the entire world. However, there is a spanner in the works. It is estimated there's currently a $2.5 trillion annual financing gap preventing us from achieving these goals by the target of 2030. As a solution to close these funding gaps, many people are looking at capital markets that manage, somewhere in the region of $300 trillion worth of assets every year, and are perfectly placed, in the eyes of many, to help identify potential funds that could be used to promote sustainability. And personally, I think this is where financial services have a real opportunity to start looking at ESG investing from not just a micro view, but more from a macro view, such that their ESG strategy is not limited to their own targets or policies, but is an enabler for a better and a more sustainable planet. I would now like to move to the next slide, where we will focus a little bit about more on some of the metrics. So I won't go into too much detail, as probably some of you are already aware with these, but if we were to just go break down ESG, the three categories are environmental, social, governance, and some of the metrics, for example, under the environment section that companies look at are around climate change and carbon emissions, air and water pollution, biodiversity issues, deforestation, and sort of many other factors, that an entity could impact through its activities, from an environment perspective. There are also under the social issues, companies are usually measured on, their customer satisfaction targets, data protection and privacy policies, the diversity challenges that might exist, and how they're sort of promoting kind of equal opportunities for all, employee engagement, human rights, and labor standards. And on the governance side, these are generally things like bribery and corruption, executive compensation, clear differentiation between the management team and shareholders. So those are some of the factors, or promote that, that are in place to promote good governance. So these metrics are not normally part of the mandatory financial reporting, or there's more of a focus to do this. And definitely some of the larger companies are now reporting on some or most of these metrics. And I think one of the challenges is around the standardization of reporting. So there have been quite a few standards that have now been sort of set up or coming together, especially I think the Sustainability Accounting Standards Board, which are looking at, and the Global Reporting Initiative. So some of these initiatives are looking at standardizing the reporting and the collation of these metrics, from various from various companies. If I move to the next slide, I would now like to run a poll and get your opinions on why do you think, what are the most important reasons for investors to focus on ESG. So let me launch this poll and I'll go through the options. So the option one is, it's ethical, it's the right thing to do. Two, generate higher and more sustainable returns in the long term. Three, so the regulatory drivers, especially in the European region. Four, long-term survival of a company, managing physical and transition risk. Or five, if you think it's something else. So I'll give it another 20 seconds. I think we're getting the votes coming in. So I'll let everybody just submit their answer. Okay, for those of you who, I think hopefully there should be a message box on your screen so you can, provide your inputs. Yeah, okay, I think we've got about sort of 75–80% of you have responded. Right, let me move on to the next slide. So I think the results are quite interesting. 29% of you have said it's ethical, it's the right thing to do. 52% of you believe it's to generate higher and more sustainable returns in the long term. 6% regulatory drivers related to ESG, and 13% of you believe it's to do with managing. It's about long-term survival, so managing physical and transition risk. And I guess having worked in this area, and my personal view is that the motivations are actually quite varied, and different asset managers operate with multiple definitions, messages, and again, not just asset managers, I think the different investors as well. But for me, all of these reasons apply. I think if I look back, what sort of started as something, as ESG investing was sort of synonym with being a bit more ethical in investments, that yes, to help protect the planet. I think it was quickly identified that actually these companies would, outperform in the long run. They're more sustainable, will generate higher returns. And as some of you might be aware, there are now definitely, like, with the UN Sustainable Development Goals, there has been a number of regulations that are coming up, especially in the European region. The SFDR, taxonomy, NFRD, LCDM are some of them, which will further, encourage or enforce investing around, ESG criteria. I think personally for me, I think it's now becoming a question of survival, and many companies are looking at it. The two areas of physical and transition risks, are quite critical. So physical risks are where, let's say, you have your assets in companies which are directly impacted by a climate event, or an an earthquake or something, and you just lose your assets or collateral. The transition risks, as we move towards more greener economy, are we actively looking at our investments, that yes, would they hold, the same value in a more sustainable future. For example, if we are investing in cars that are only, the companies which are only manufacturing the traditional fuel cars and have no plans for electric cars, would they still be in business 30 years down the line? So I think it's for me, it actually might become more about a survival than and that might sort of dominate in the coming years. So thank you for that, Paul. And I would now like to move to the next slide and talk a little bit about what data methods are applied today for ESG analysis. So there are a number of sort of areas I think that companies look at when they're trying to look for ESG investments. I broadly divide them into three areas. One is the data available from the companies themselves that you're investing in. So where they report on the different ESG metrics, as part of this, the corporate reporting or the annual reporting. At this stage, that's still relatively light, and some of the companies that are not as big as probably do not are providing all the data that is required. Then there are the external rating agencies, which which are quite helpful and rate a lot of these companies. There's data available from MSCI Sustainalytics, as an example, that provide their views on and provides ESG rating on the different companies that you're considering for ESG analysis. And also then there's independent research that the investors and asset managers conduct on their own, reading news of alternative data sets and also and combining all of the other two aspects as well. I think if we continue to the next slide, these themes, from all of this information, generally what companies are trying to look for, are sort of any sort of ESG controversies, that could, would require like an immediate decision in terms of the portfolio that they're managing. Also, sort of more from a bottom-up analysis, looking at the materiality and the rating frameworks. And then looking at any kind of emerging ESG topics. And all of this is then fed into the different parts of the investment process. So from portfolio index construction, risk modeling, rating, and then quantitative trading, and also in price and lending decisions. I think if we just move to the next slide. So for me, the current challenges with some of these ESG assessments is, one, the information is not real time. So a lot of this information, captured through corporate reporting or through the rating agencies is actually based on the previous quarter or the quarter before or the last time the reporting was done. And it's sometimes not sort of so much in sync with the live, what's happening with that particular company today in terms of its sort of ESG obligations. It's, again, this data is sort of, the standards are still, being sort of defined, and this is not available. The data is not available for all the companies, or all the data points that you need are not available. And also there are issues where the information could be missed because there's sort of large quantities of data. So there are definitely some clear challenges with the data that is available in terms of ESG assessments. I think I would like to conclude here and hand over to Riaz to sort of talk more about how artificial intelligence can be used to overcome some of these challenges and help with the ESG analysis.
Yeah. So thank you, Gaurav, for the background. And before we get into maybe how AI can enable ESG assessments, I'd like to start with a poll just to understand from your perspective. Are you considering AI processes within your ESG framework? So I'm going to launch the poll, and please, hopefully you should get a pop-up, and please respond as we go. So great, we see some responses coming in. I'll give it about 20 seconds more, and we can share with you some of the results. Okay, great. We have about 65% of the votes in. So why don't I end the poll and I'll just share with you some of the results. So we have 8% of the participants voted yes. The AI processes are currently within their ESG framework. 31% no. 12%, which is, 46%, which is interesting, is not yet, but exploring the possibility. And we have 15% who voted not share. So let's dive into it a bit in terms of how AI can enable ESG assessment. So the goal of this is really to be able to quantify which companies have strong sustainability, governance, diversity, inclusion, and ethical practices. And we're really trying to capture this and quantify this from natural language communications. And so one way to do that is through natural language processing, which is a subset of AI. And this can be used really to gather information, ESG information around companies, and also quantify the perception around those practices that have been identified using sentiment and using other types of quantitative metrics as well. So what are the ingredients? What are the core components you need to be able to build out a ESG NLP model? So the first, it starts with content. And so we need content, a diverse set of content, and ideally content that's more real-time in nature. So that, news, transcripts, filings are periodic, but they contain information, press releases, trade journals. So we want to have a rich set of high quality content where we can start to extract and identify a company's ESG practices. The next ingredient is really our taxonomy. So I think, as Gaurav mentioned earlier, there are multiple different types of taxonomies we need to consider. There may be internal frameworks, there may be industry standard frameworks. There's also controversy views that we need to be able to capture. So having the ability to quickly build out those taxonomies is critical to building out these models. The other aspect of taxonomy is around a company itself. So when we're looking at a company and we're trying to capture information around it, we want really a 360 view, which means we want to be tracking conversations that are being had, or that leadership of that company is making around certain ESG practices. We want to understand brands and subsidiaries so that we can really have a high level of precision and accuracy when we're identifying these practices around the company. So that's on the taxonomy side. And then, of course, once we're able to capture this information, we need to start to quantify that. We need to be able to tie this back, have models that can calculate out things like sentiment appropriately based off ESG topics. We need to be able to tie it back to these issues back to the companies that they're related to. And so these are really the core components that we've seen when building out these ESG NLP models. And so just to unpack that a bit and give an example here, on the left-hand side, we see a snippet of text from a particular document that we're analyzing under the ESG process. And so the NLP model needs to answer the following, and identify the following type of information. So we need to first identify which within the document which passages are actually related to some type of ESG issue that we're tracking. We then need to identify the point one, we need to identify what are the important related passages, and we have to also identify which issues within those passages are being identified. So in this case, if we look at the top, price fixing of debit charges, that's really an anti-corruption or anti-competitive behavior, right? That's being identified under this. Then we need to identify what entities or companies are linked back to this passage that's being identified and the practice. And in this case, we see Visa and MasterCard. And then we want the model to be able to identify the sentiment around that. So is this a positive, or is this a negative or neutral statement around the company? And in this case, we find that it is it's a negative. It has a negative connotation. And then another important aspect is within a document, you may find several different ESG practices, several different companies, but really you want to identify what are the relevant issues, what are the most important issues that are being discussed. And there's models that can identify that. And in this case, where we see a couple discussions in this document around anti-competitive behavior, we can maybe assume the model might indicate that being the most highly relevant ESG practice or issue. So now that we have a little bit of a background in terms of how these NLP models would need to be built and be able to identify ESG practices, I'd like to take you through a demo to show you how this can be done within the Accern platform. And really we'll look at following the process that we described, a couple of steps where we are able to bring in our data, our content sources, able to build out that ESG extraction model, and then quantify the results for downstream analysis based off the businesses. And within this model, we're going to build out a couple different pillars. So we're going to look at environment practices around a company, and these are some standard issues that we have within our base model, social practices, governance, and also a few controversy topics as well. And so once we build out that model, we'll take a look at it. We'll take a look at how that can be used from two different perspectives. One is from a research analyst and an ESG research analyst, and their sort of role is really to be able to summarize relevant ESG related risk exposures and opportunities around the companies and portfolios that they're analyzing. And these assessments are generally supported through various materiality maps, and those can vary again based off the industry, country, and company. So a company in the industrial sector may have a different set of materiality issues than someone in technology. And we're going to take a look at it from another sort of persona or lens, which is the banking side. And in this case, a relationship manager who oftentimes, as you go through some of these, they do corporate or social responsibility assessments on their clients. And how they do that is they'll look through several different publicly available documents like annual reports, sustainability reports, news, and other areas. And that's a manual process, and that can often take 1 to 2 hours per company. So we're going to see how can AI and NLP with an ESG lens accelerate that workflow. Okay, so let's go into the first aspect here. Move into the Accern platform. And so this is the Accern platform, and there's what we'll focus on for this session is really how can we build out an NLP ESG model. So in this case, we have our workflow here, right? So the first step here is to build out a use case. And I've constructed a template here, so we can create something from scratch, but I've created one called ESG Analytics. And really, you follow this 5-step process that I alluded to earlier. So one is around selecting your content. And so as part of the Accern platform, we have integrated content from a number of different providers. As well, and oftentimes we see you may have internal content that you want to bring in as part of this model or in pipeline that you're building out. And that can come in from various different databases or integration points. So in this case, let's say we're interested, our analysts are looking through news, and we want to build this out on this ESG analysis on news. So we've selected a public news and blog source, as well as Dow Jones, which is an institutional newswire source. So that's our first sort of decision point. Our second step here is around taxonomy, and we want to in the taxonomy piece, we have two concepts. We have our entities, which are again the companies that we're trying to track these ESG practices around, and the themes, which are what are the type of ESG practices and controversies that we want to extract and identify in these companies. So in this case, let's say we're looking at well, let's pick all the indices. So under here, we're picking all the indices. But one thing I'll just point out is that under each of these indices, you'll notice that when the chart loads here, that we have individual companies, and under each individual company, where we are also tracking the leadership, the product, and the subsidiary. So that's quite important, again, as you want a full 360 view. And then we have our ESG practices. So these are the different topics, our ESG issues that we want to track. And under each of these issues, there's a full taxonomy around how does energy management, how is energy management discussed in natural language. And that's built out, we build that out through another AI process, which looks at topic modeling, and it takes a corpus of data, a historical corpus of data, and given some seeded keywords, it starts to identify clusters of other concepts around this topic that in terms of how it's being discussed. So that really gets you this robust description of how a certain issue is being discussed in the content that you're applying this model to. Yeah, so that's our second step, is selecting the ESG issue. So let me turn that on. Our third piece is around applying an NLP or a set of NLP models to the extractions. So in this case, we have various different ways that we can extract and look at extract information around the content. We can look at it at the document level. And one interesting note is that is about clustering. I'll point out. So clustering really, if you think of it, when we're looking at large volumes of content, oftentimes you may get an article, or in this case, when we're looking at news, that gets republished. It may get published, but slightly changed. But contextually, it's really talking about the same ESG concepts around around a specific company, and that's where clustering can really help to, bundle or deduplicate when you're looking at your downstream analysis. You also have things around entity classifications. So you want to, this is really around identifying the companies. And one of the critical aspects that you want when you build out an AI model is to be able to tie the extractions back to other perhaps downstream data sets and processes you have. And so, having the ability to, when we identify a passage, associate it back with the right company, and then also meta tag that with things like tickers and open figures. That's an important aspect of when you're considering building out these models. The theme classification piece, this is where we're starting to identify the ESG themes. The model's also starting to identify certain, within that theme, certain key topics that are being discussed. We have sentiment, which is the polarity around that event. How is it being perceived by the market? And there's various levels of sentiment that can be calculated. And then relevancy, that really determines how important a particular topic is within our issue is within the document that's being analyzed. The other sort of interesting point to consider as well is around foreign language. So oftentimes we focus on English language content, but there is content in other languages that have very valuable ESG signals. The final step, once we've selected that model, is now to decide our destination point. Where do we want the output of and the ESG signals that we've generated to start to flow into? And so, what again, having the flexibility to select your destination points is an important consideration when building out these models. To easily integrate it back into your databases or data warehouses, into your file stores, into a business intelligence tool, or just as an API itself, where you can integrate that into your downstream business processes. So once I've made that selection, in this case, I'll push it into a dashboard. I review my use case and I execute. I kick it off. And so what will be deployed is really an NLP, an AI NLP model that is now continually looking at, in this case, news and the Dow Jones and the public news, and it's looking at our ESG lens and identifying if any type of ESG signals for those companies and delivering that back to us. And so let's take a look now at how that model can be used by a research analyst. And I'll give an example of one company. So imagine now I'm an ESG research analyst, and I've been asked to do an assessment on Glencore. So Glencore is a mining company. And in this case, I'm looking at this from a controversy standpoint. So I'm looking at mining incidents. So this is and seeing, has Glencore been involved in any type of mining incidents over my observation period, which is Jan 1st to March 2021. So, what we immediately see is based off some of the relevancy parameters, and we've really narrowed down, and the model's really narrowed down to the key stories and sources that are speaking about Glencore and specifically about mining incidents that Glencore may have been involved in. And so what we've identified here is, it's gone in through the thousands of sources that we have. It's narrowed it down to 79 sources. We see 107 stories. So these are think of them as articles in this case for looking at news. And we see 319 signals. So within one story, you may get multiple mentions around a mining incident. So that's why it's generally higher than the number, or it's always higher than the number of stories are equal to. So looking at this further, and looking at this over the time period of analysis, what I start to see is first the volume. So these are the volumes of the mining incident stories that have been discussed for Glencore over the period. And what clearly stands out to me is here there's a spike around I guess this is around July, August, around Glencore. And at the bottom here I have my sentiment around what is the market perception. So big spike, very low market perception indicates to me there might be some a negative incident here, and then I can start to see some recovery around the topic. So taking this further, we're starting, the model now starts to extract what were some of the key concepts that were identified over that period. Miners were killed, mine collapsed, so these are some of the key topics that were discussed. And then we have sort of a chronological summary of the key points around Glencore and mining incidents. So I can quickly start to, over that 1 year period, I'm able to quickly get a summary of the key incidents. So here, what I'm starting to see is on the first part, Glencore, so there's some mining safety issues around tail dammings, and they're doing some illegal work there. We then start to see, and this is around that August, July, where we saw the large negative spike. There was it turned into a mining incident where at least 39 people were killed due to a dam collapse. And further going on, we're seeing around now about almost a year later, what we're starting to see is a significant event here where they're now starting to monitor the safety around dams using satellite imagery and trying to again prevent repeated disasters. So they're taking some action. And then, followed by that, we again see some mentions here around, or significant mentions here around how Glencore is, they've exceeded, they're doing better, but they're exceeding some of their methane, I guess, thresholds that are required by law. So I quickly get like a nice chronological summary of the key events around Glencore, around this controversy. And this can be done at scale. So imagine this being done at scale across the entire, mining industry, identifying which companies, and then drilling down. So you can either drill down from a top-down perspective, or from a bottom-up. Furthermore, if I'm interested in getting down more detailed into specific, more detailed stories around that, you can get into there. So the model, a good model allows you to get complete transparency into, the underlying data and what is supporting the analysis. The other aspect, so this is around the controversy. The other aspect that, from a research perspective, that we often see is that you want to look at materiality. So I've focused again on Glencore in this example, and I'm looking at a materiality map across that company. And here I can start to identify what are some of the key issues that are popping up. So we see, out of the, I think the 27 or 28 practices we had listed on the in the previous slide, these 7 have popped up as relevant over the, and you can see some stuff around GHG emissions, ecological impacts, which indicate that there's some work still to be done there. And we can then further down, drill down into that information. So now what I've done is I've been able to look at a controversy view, as well as a materiality map view for this company that I've been asked to analyze. And I've been able to basically get a summary of all this information across thousands of sources, really accelerating my ability to come up with an independent analysis very quickly. So the one other lens or persona I want to dive into is around the relationship manager. And I mentioned earlier that one of their aspects of their role is to do periodic CSR assessments, or corporate social responsibility assessments, on certain companies. And so this is just a different lens into the same data that in models that we built out. But in this case, what we're looking at are different questions around. So that as a relationship manager, I need to answer different questions around a company. And these questions, so for example, does the company have a policy program banning child labor? And so as a relationship manager, I would need to go through annual reports, sustainability documents, news, and other areas to come up with this answer, really, right? Yes or no. And this is where, AI and the models that we've built can really accelerate that. And so looking through here, these are sort of the 7 questions for this particular company, Siemens. And we see a recommended answer. So this is what the model is saying as a recommended answer that the relationship manager should consider as yes. It's confident in that, based 91% confident that it should be yes. And it's identified through the documents that it's been asked to analyze. The model's been asked to analyze. It's identified, 19 relevant areas where it's identified that the company does have a program in place for child labor. And you can see, the subsequent recommendations and answers. And so again, transparency is very important to understand why is the model making these type of recommendations. And that's where, we can go into another view here and start to drill down. And, let's go into that first question there, right? And so it updates and it tells me, look, okay, these are sort of the key topics that are coming up. It was found in the sustainable supply chain document. These are the key passages that were identified. So really helps to accelerate that relationship manager's ability to come to the conclusion that they want. So that's that's sort of the second view I wanted to, and persona I wanted to share with you. There's other areas that, again, depending on the type of quantitative trading, the AI models can be used for other pricing and lending decisions. But hopefully you get a sense of how these models can be applied to these two different type of personas. So I just want to conclude the presentation piece by just highlighting some future developments that Accern's working on. And so we went through our adaptive NLP workflow. We are also releasing a adaptive forecasting workflow. So you think of it as a similar no-code workflow where you don't have to build the code, but you can build out forecasting and predictive models. And some of the applications of this that we're applying to the ESG space is to look at how do these ESG factors that we've identified, how can they affect or impact a company's long-term performance? So, example, credit risk or performance of the company's equity. How can we use these ML models to start to approximate and score companies which do not have a lot of information around for ESG, such as SMB, small medium businesses? Also looking at how can we identify early warning signs of potential ESG risk. So as we start to identify certain trends or ESG signals, can we infer through models that this there's an impending incident that might happen? So these are just some of the areas. I'm sure you guys may have other ideas as well, but in terms of how these forecasting ML models can be applied to the ESG space. But with that, I'd like to thank you for your time today, and I think we'll open it up to any questions.
Thanks, Riaz and Gaurav, for the great presentation. And we do have quite a few questions. So to start it off, how about answering one about, so ESG is widely known, but what do you think about political factors? Does governance kind of go through that, like political, so looking at political factors such as political stability or a perception of it, freedom of press, freedom of social media? Can you speak to that?
I can. So thanks. I think it's a great question. I think in my view, the ESG aspects that we are referring to is more to do with how the company's activities is impacting its environment, or how sort of it is looking after, like from a social perspective, that that they don't have any discriminatory practices. The data protection standards are high, customer satisfaction is high, and also the governance, that they have a clean governance in place. The bit around politics, in terms of political stability, freedom of press, freedom of social media, these could largely be impacting countries or a particular region or a state, and they're not necessarily like driven by one particular company, but more by the government or by and could be impacting many companies. So I think from looking at a micro lens, when you're looking like, okay, which companies are contributing more, how they're doing on the ESG factors, you probably just look at ESG. But if you're looking more from a macro or a country perspective, then yes, probably politics come into it as well. Hope that answered the question.
Great, yeah, thank you so much, Gaurav. The next question would be about the Accern platform. So we have a question from Jeremy. Have you trained your model using SQUAD data? Did you fine tune it to ESG topics?
Yeah, thanks, Jeremy, for that question. I can take that. So I'm not sure on the squad data whether the model has been trained for that. We can circle back on that one with our team, but I can sort of confidently say that, yeah, the model has been trained and fine-tuned to identify ESG topics and understand how, and understand things like reduction in GHG, how that's a positive aspect as opposed to a negative aspect. So the topics are trained, and within the platform, one of the areas I didn't touch on is we do have a model, a sentiment trainer that allows you to feed in and provide adaptive feedback to the model to adjust it beyond the current state. If so, that allows you to bring in new topics as well that may not be there, and additionally fine tune as well.
And then, are there any AI applications that can help ESG investing apart from NLP? This is also from Jeremy.
Yeah, I think so. Some of the work we're doing on the adaptive forecasting side, I think which uses NLP, which uses these NLP factors as feature sets within the model. Those can definitely be applicable and used for helping with ESG investing. I mean, and outside of that, I think if you're looking at climate and other areas, there are some other interesting, things like satellite imagery and other AI techniques that use more image processing and other techniques that can also aid in helping to quantify and be some of the ESG issues and practices.
So for the sentiment analysis part, how do you compute a data point? What is the time frame? And do you average over the results from several sources or hits?
Yes. So we calculate it at the most granular level, which is at the passage level. So when we identify that passage of text where an ESG issue was identified, we're calculating sentiment at that signal level, if you will. We then can, because we're calculating it from that bottom up perspective, we can then roll that up to any aggregated point that we're looking to do some analysis on. So if it's at a sector level, we can take all the companies that we're analyzing within that sector or the cohort within that sector and roll up the sentiment based off the average. And there's various different mechanisms in terms of how you might want to roll up that average.
Great. And then our next question is from Pedro. What is the full capability of the foreign language content analytics? For example, can it analyze content in Mandarin and deliver back findings in English?
That's that's correct. Yeah, so we have about, I believe it's around 110 languages that we can translate and deliver the results back in English. And we are currently working on building a native sort of taxonomy and model for a few different languages. I'd have to confirm if Mandarin is one of those ones that we're starting with, but to your first point, yes. So we can take in, content from several different languages, then convert that back into English, or actually present the results back to you in the native language again.
Okay, great. And then Pedro also asked, the use case that you showed is clear for publicly traded companies, but what about obscure private companies or startups?
Yeah, that's a great question, Pedro. And yeah, so with the private companies, which clearly may not have a lot of information available around their ESG practices, that's where we're developing some of these these other additional ML models to be able to look at companies of similar characteristics that we do have information on, and looking at various different characteristics around the small private company and a larger publicly available cohort to try to infer what their ESG practices might be. And that's using machine learning rather than heuristics.
Yeah, and actually, I would like to add to that, Riaz, that in my view, a lot of the public companies, have the traditional data that they report as part of their, corporate reporting obligations, as well as potentially MSCI Sustainalytics, would rate them on the ESG scores. A lot of these private companies have a lot of that data is either limited or non-existent. So in fact, any news that we can generate, or any sentiment that we can build from the news that is publicly available or to the premium news channels, this sort of AI NLP solution might provide more data than what exists today, for example.
Great. And then our next question is from Goku. Do you have connection news and blogs in publications such as Financial Times, Mandate Wire, or Professional Pensions, or do they come under public news?
Good question. I believe we cover all of those. So under the public news side, there's about 60,000 publications that are being continually crawled and updated. Those are both very global publications as well as very local, regional publications as well. So I need to confirm the exact, the ones that you mentioned, but I'm pretty confident those are covered in there, in that set. Yeah.
And then another question is, how do we know the content from the newsfeed and blog are legit? What were the feedback from the investment personnel? We are not measuring real carbon footprint of a company, so how can we know that this is added real value?
Yeah, so that's a great question. I mean, there are analytics that we use on our end to identify higher quality sources. If sources have been republished, if the authors have published before. So there's certain mechanisms, there's certain pre data analysis that we do on the sources to try to identify if they are legit and credible sources before we process them to extract any signals.
And the next question we have from Jeremy, what kind of models do you use to forecast ESG related things? What kind of data or variables do you use?
Yeah, so in terms of forecast, so the models are built out. So on the NLP side, the models are built out using, so we first construct the model, the topic using an LDA model to identify certain topics and key phrases and bigrams, trigrams around how these topics are being discussed, these issues are being discussed within content. The model is then trained based off that to then identify relevancy, sentiment, and then it's that once the model is, once it's back tested and we're happy with the performance, we then release that.
And can you further elaborate on how you go from your model pipeline selection to the use cases you presented, from the platform to the questionnaire or assessments, for example?
Right. So once we deployed a pipeline it's an API feed. At the very heart of it, it's an API feed and it's identifying signals. Now the use cases on top of that are just visualizations of the results of the API, and we're presenting the results at different aggregated points and just different workflows depending on the end user persona and how they'd be looking and analyzing the data.
All right, and we have a question from Henry. Does it have environmental metrics converters? For instance, can one convert units of energy into GHGs?
So no, we don't do that, Henry. We're looking at for example, for GHG of a company, we're looking at that more from the natural language component of what's being discussed around that company and what impact they're having on GHG. But at the moment, we're not extracting numeric information from these documents around the company's GHG emission, or how much units it's emitting, or in that case. Yeah.
All right, we have a question from an anonymous attendee. What would be your advice for starters who are just beginning to use AI in ESG assessments?
So if I may answer that, my advice would be in this instance, like do not start with, that you have to use AI, start with the problem. So for ESG investing, what information are you looking for? What are your gaps? What is missing? And then, look at how then AI can help. So, try to come up with the questions that you're looking to answer and then look at the solution on how it can answer those questions.
All right, so we have one question from Himanshu, who is a little bit confused between clustering and themes. So extracting based on clusters, does the clustering then educate the formation of the various themes that we saw before we started talking about the destination point?
So yeah, I think there's a couple. Yeah, so the clusters, and not completely clear on what aspect maybe you're referring to, but there's the clusters around where we do document clustering, and what that is looking to, that algorithm, what it's looking at is it's looking at the document that comes in, and it's looking at what's been identified in that document, what's being spoken about around the companies in that document, and it's looking at other documents that come in after it or before it, and whether it's similar, whether it's talking about really the same issues, the same concepts. So we cluster those together so that you can see, wow, this one particular issue or this one particular type of story that's come out has been republished, and it's gaining a lot of velocity and momentum in the market. The themes, on the other hand, are the individual, issues that have been identified within that document. So that's the distinction. I hope I captured the question correctly to give you the right answer, but happy to follow up further on that as well.
All right, well, those are all of the questions, and looks like we are right at time. So thank you everyone for attending the webinar, and you should receive an email from someone on the team following the webinar. And thanks so much, Riaz and Gaurav, for a great presentation.
Thank you. Thank you, everyone.
Thank you. Thanks all.